It's the moment you've been waiting for. The 2023 State of Housing Market in the Knoxville area from the Knox Area Association of Realtors. Let's dive in. Warning, some of this I was reading through and I was like, this is kind of depressing. But we are going to look for the positive and bright spots. And it's just going to help inform us, look at some facts, and yeah, let's dive in. The good news for East Tennessee when it comes to overall economic conditions is that we're not really mirroring what's happening across the rest of the country. So Carr writes, East Tennessee's economy has displayed remarkable resilience, rebounding from challenges and maintaining steady growth. If historical trends persist and the region continues to benefit from migration and a strong jobs market, Knoxville is well positioned to fare better than many other U.S. metros should the national economy slip into a recession. So the idea is that because we have strong migration trends, because we have a strong jobs market in this area, that we're pretty well insulated, against any sort of recession if, the economy should head that way. According to Moody's Analytics estimate from 2015 to 2019, Knoxville's inflation-adjusted gross GDP, gross domestic product, grew an average annual rate of 2.1% before plummeting 5.2% year over year in the second quarter of 2020. So we saw this COVID hit, GDP coming down. Knoxville experienced a robust recovery from the pandemic-induced recession with real GDP growing 9.3% in 2021, which is the largest annual increase since at least 1992. Economic growth continued into the following year, albeit at a slower pace, with Knoxville's inflation-adjusted GDP estimated to have expanded by 4% in 2022. So essentially, you can see on this chart, if you look at kind of what's happening, is we're seeing growth, etc. Then this right here is from the recession 2008. Fast forward 2014, we saw a little slump. 2020, we see a little slump. And then this is post-COVID, we see GDP coming up in the Knox area. So that is super promising. That's awesome. So if we look at Knoxville versus Tennessee, the state versus the U.S., and overall GDP projections. So Knoxville's inflation-adjusted gross domestic product is projected to grow by 1.1% in 2023 and 2.64% in 2024. By comparison, real GDP in Tennessee is expected to grow 0.7% in 2023. So Knoxville's at 1.1%, Tennessee at 0.7%. And then the U.S. growth is supposed to be 0.2%. So Knoxville 1.1 in 2023, Tennessee 0.7%, and then nationwide 0.2%. So that's awesome. And then if you look at 2024 projections, Knoxville 2.4% growth, Tennessee 1.6% growth, and the U.S. 1.3%. So Knoxville is projected to economically grow the GDP double what the national average is projected to be in 2024. Now, again, that's a projection, so just kind of keep that in mind. Let's talk about the labor market. So essentially, long story short, the summary is that Knoxville has totally recovered from the pandemic and that situation. This is the quote from the Knox Area Association of Realtors. So after losing thousands of jobs from the first to second quarter of 2020 as a result of COVID, Knoxville's labor market has completely recovered from the pandemic and currently leads its in-state peers with the fastest non-farm payroll growth in Tennessee. Overall, employment gains in the region have been broad-based. Total non-farm employment in the Knoxville metro area increased by 3.7% in 2021, 4.4% in 2022 on an annual basis, exceeding the overall average annual growth of 1.5% from 2015 to 2019. So we saw 2015 to 2019 average growth of employment was 1.5%, and now in 2022 we were at 4.4%. The only note about this that is interesting is that there is a difference between high wage versus low wage. So Carr writes that the recovery was highly uneven across income groups. So total unemployment for high and mid-wage jobs recovered to pre-pandemic levels by December of 2020. So essentially people that were in mid and high wage jobs that were lost, those jobs are back by December 2020, high wage and mid-wage jobs. However, low wage jobs have not recovered. This says that essentially low wage jobs, which account for roughly 50% of all jobs in the metro area, did not return to pre-pandemic levels until May of 2022. So almost 2 years. So higher wage workers saw their job market recover 3 times faster than low wage workers. So what you can see here on this graph is, this is saying total non-farm employment. And then what you're seeing here is total non-farm employment. So this is higher. But then also when we look at this job wage situation, this graph, essentially, so orange and turquoise, these two, you can see that this is their recovery. So we saw this dip, right, in 2020, where now this line was like pre-pandemic levels, right? So what we're seeing now is that high wage and mid-wage jobs definitely are above pre-pandemic levels, and they have basically bounced back at a higher rate than what happened with the low wage opportunities. So anyways, super interesting. So as of the fourth quarter for 2022, job totals in all 3 wage tiers had fully recovered, with Knoxville's total employment base roughly 6% above pre-pandemic levels. As such, Knoxville's labor market remains historically tight. The unemployment rate fell to an annual average of 2.9% in 2022, almost a full percentage point below the average of 3.95% in 2015 to 2019. So essentially our unemployment is is a little bit more than a percentage point lower than what it was in that 2015-2019 period. So that being said, active job postings in the Knoxville metro area are approximately 55% above pre-pandemic baselines as of April 2023, according to the Indeed Hiring Lab. So excess labor demand also is evident in the U.S. Bureau of Labor Statistics data, which indicates there are currently around 2 job openings for every unemployed person in Tennessee. Take that, AI. I mean, I'm just kidding. I don't know what's going to happen with the AI, but I mean, seriously, for currently people are like so worried, which I get it. We have no idea what's going to freaking happen, what's happening with AI. Are they going to replace us as humans, whatever. But I just think it's like in the wake of that, there's still currently 2 job openings for every unemployed person. And I know some of you guys are out there like, what are those jobs, Haley? Maybe we don't want those. I'm just telling you, it looks like there's work out there. You feel what I'm saying? So this report says such a rapid growth in job openings is the result of multiple factors, including strong inbound migration, flexible work arrangements, and successful economic development efforts. It says, while job postings are beginning to flatten, the sheer volume of unfilled jobs underscores the extent of the labor shortage and the importance of attracting and retaining workforce talent, especially among key age groups. So, I mean, we've got a strong labor market in the area. So I think that is like a major, major, major plus for the Knoxville area. So love that. Something interesting that this report does note is that there's an issue when it comes to the share of population and their age. Almost essentially what Hanson Sell with the Knox Area Association Realtors is calling a demographic headwind. So we have this kind of aging population of workers. And so essentially what he writes is Knoxville's labor market is facing major demographic headwinds due to its aging population. A major driver of the decline in overall labor force participation over the past decade. The share of the population aged 25 to 54, also known as prime age workers, fell 37% in 2022, which is the lowest level since the 1990s, while population share age 65 and older increased 13.5% in 1990 to 20% in 2022. Hansen writes that, or Knox Area Association of Realtors writes that following the pandemic-induced recession and subsequent reopening of the U.S. economy, inflation began trending upward in the early months of 2021. This inflation provoked aggressive action by the Federal Reserve's Federal Open Market Committee, FOMC, intended to soften labor market conditions and ease price pressures. The results, however, have been limited, and despite the fastest pace of monetary policy tightening on record, convincing progress on slowing inflation has yet to fully materialize. So, with all that being said, obviously the elephant in the room is about mortgage rates. Now, the Federal Reserve raised the target range for federal funds rate by 5 percentage points since March of 2022. Prompting mortgage rates to increase more than twofold from 2021 to 2022, which is like crazy. So that being said, in the first quarter of 2023, the average 30-year fixed mortgage rate was 6.38%, according to Freddie Mac, more than 2.5 percentage points higher than the previous year. Now that we've talked about some economic indicators such as unemployment, employment, what's going on with the labor force, what's happening with inflation, let's talk about the actual housing market. So the key takeaway is that we have continued low supply, we have continued demand, prices are remaining elevated. Those are like probably my three, like if you don't listen to anything else on here, prices aren't going down. Okay, I know everyone's like prices are gonna come down, the bubble's gonna burst. Not in the Knoxville area. We are just sitting so low in inventory, we've not recovered. So let's talk about that. So after 2 consecutive years of record-breaking growth, the East Tennessee housing market took a step back in 2022 as higher home prices and sharply rising mortgage rates pushed many buyers and sellers to the sidelines. So rates went up, people were like, ugh, and just kind of paused. Despite the decline in sales, so because of this, we saw the number of sales in the area go down. Despite this, limited available inventory and strong economic trends continued to place upward pressure on home prices. So yes, we saw mortgage rates go up. People froze. We already had an inventory problem. This kind of exacerbated it. And as a result, we have not seen prices come back down. So when you look at home sale prices, this graph I'm going to show you is about single family homes 2000 to 2020. And what you're going to see is that, we'll just look at it. Like this is 2000 and this is 2022. This is looking at home sales. Interestingly, what we saw is that, like, obviously this is 2020, 2021, 2022. So we saw this surge in 2021 and we saw a dip comparatively in 2022. So I just point that out because, yeah, we did see less home sales, but we still, I mean, it's still pretty crazy. So total residential home sales in the Knoxville area declined 9.1% from 2021 to 2022. So 9.1% decrease in total number of sales, which is the largest decline year over year since 2009. Single family homes declined 8.6% from the previous year. Condo sales declined as well. So you can see here's a graph of condo sales, again, 2000 to 2020. And we see a decline there compared to 2021 versus 2022 decline. So even though Knox Area Association of Realtors goes on to say, despite the considerable decline in sales, home prices continue to rise at a historically strong pace across the East Tennessee region. The median sale price in the Knoxville area increased 14.5% on an annual basis in 2022. So despite a decline in the number of sales, we saw a 14.5% increase in prices overall. Strong price appreciation in the region is further evidenced by the local median listing price exceeding the national average for the first time in 2022. So for the first time ever, the Knoxville median list price exceeds the average price for what's happening in the US, the national average, I should say, according to Realtor.com. In the fourth quarter of 2022, the median listing price in the Knoxville area was $426,633 compared to $412,743 nationally. By April of 2023, the local median listing price was approximately $50,000 higher than the national average and the 47th highest among the top 150 US housing markets. So I will say that I have heard a number of clients that find me from YouTube or wherever that have said, we've been looking at the Tennessee area since 2018, 2019, and at that time it seemed pretty cheap. And the idea is like, we didn't take action, COVID happened, whatever, blah, blah, blah. Now prices are crazy higher. And this is not an exaggeration. I mean, I literally just said that the typical home value is 65% higher. Knoxville continues to face a severe housing shortage stemming from over a decade of underbuilding in the wake of the 2008-2007 global financial crisis. As a result, housing inventory in the Knoxville area was suppressed throughout 2022, and overall inventory levels remain significantly below pre-pandemic levels. And this is something I talk about with a number of people that are moving in about this idea that we have not gotten back to pre-pandemic levels yet. Compared to 2018, monthly inventory levels were down 68% on average across the metro area in 2022. So compared to 2018, we're down 68%. So check this graph out. This is what I keep wanting to show people. And at this time, this was a pretty strong market. Now we're seeing that we've not recovered because here's 2020, right? And we've not gotten back up there. We started to creep back up and then rates went high and then we're just like, bleh. The average interest rate for outstanding residential mortgages in Tennessee was 3.9%, down from an average of roughly 5.4% in 2013. So this idea is that average interest rate for people that have a mortgage at 3.9%. In 2013 was 5.4, which is way below what's happening right now when it comes to interest rates as I make this in June of 2023. So essentially, just over 60% of outstanding residential mortgages in Tennessee have an interest rate of 4% or below. Let me say that again. Just over 60% of people in the state of Tennessee with a mortgage have an interest rate of 4% or lower. And this essentially makes people not want to pursue buying a house because they have a great mortgage rate and they're not wanting to do anything about it. Or not wanting to depart from a less than 4% to a 6 point whatever or 7%. Some of my people have been quoted. So essentially, another situation, and this is about the housing shortage and underbuilding. Why do we have a housing shortage? Yeah, we have this lock-in effect going on, but what's been happening prior to the pandemic, prior to mortgage rates? So from 2010 to 2019, household formations in the Knoxville metro area outpaced housing completions by 12%. This dynamic intensified in recent years with household formations estimated to have exceeded completions by 50% in 2022 alone. This production gap helps to explain the chronic lack of housing inventory, which continues to place upward pressure on home prices and rents across the region. So housing affordability essentially is impacted by three major things right now happening in the Knoxville market: high home prices, rising mortgage rates, and low inventory. These three things are what are impacting affordability. What we have seen from 2015 to 2022 is that in the Knox metro area, home prices have increased at approximately or by 107%. Meanwhile, income has increased by 28%. That is not a 1-to-1 ratio, which makes affordability non-existent. Because if we are seeing prices go up 107% over, that 2015 to 2022 period, but income is growing only by 28% over that same 7-year period, that's not affordable because your income is not matching that growth in prices. Interestingly enough, this is showing that overall, this is the housing price income ratio. So usually it's like a 3-to-1 situation. Well, in 2022, we saw a 5.3. So what it's saying is that Knoxville has historically maintained an average price to income ratio of around 3%, which is this flat line. By the end of 2022, the figure rose to 5.3, the highest price to income ratio in the region since at least the 1970s. Housing affordability, there's a chart on page 19. It says housing affordability comparing 2021 versus 2022. So if we look at 2021, 2022, interest rate in 2021, 3.11, 6.42 in 2022, 3.31% change, right? So look at this. This says that median sale price in 2021 is $270,000, in 2022, $315,000. Crazy. So down payment needed in 2021, $35,000, 2022, almost $41,000. Monthly principal and interest payment needed in 2021, $1,097, whereas in 22, $1,876. That is a big difference in mortgage payment. So overall total monthly owner costs $1,300, versus $2,200. That's crazy. And then it's just showing you to keep pace with this. If you were going to keep pace with this difference, you would need to go from that $55,000 to the $88,000. And so you can check out the report and see this is based on, certain metrics, but how much down payment, etc., how much in closing costs, blah, 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 percentage of interest. But that's a big difference, right? Homes under $250,000 represented 72% of homes on the market. In 2021, that's 42%, and 2022, 31%. Now let's talk about homes over $500,000. From 2015 to 2019, homes over $5,000 represented 4.3 homes on the market in the area. In 2021, homes over $500,000 represented 15% of the market, whereas homes over $500,000 in 2022 represented 22%. So we saw this major change. Sorry for my handwriting. Homes under $250,000, 72% in the 2015 to 19 market. Whereas you saw this crazy decrease to be 31% in 2022. So again, that speaks to this affordability issue of we're outpacing, that affordability is outpacing income growth. So not great. Now, something I think is interesting is in the midst of all this, I hear often people being upset with investors. But interestingly, this report from CAR is showing that investor activity is really not crazy when it comes to overall growth. So I thought that was pretty interesting. In Knox County, the market share rose only marginally when the investor purchases accounting for 14% of home sales in 2022, up from 11% in the previous year, so a 3% change. The estimate, however, likely overstates the impact of investors as it does not distinguish between typical investors and iBuyers, an institutional buyer, who puts homes back on the market and thus do not ultimately decrease the supply. So this is saying that yeah, we saw a little bit of growth in investors, about 3% growth in investors that were buying between 2021 to 2022. However, it's not distinguishing what those people are actually doing with the homes. So an institutional buyer, a buyer that is a fix and flip, they're going to buy it, renovate it, and put it back on market. That's actually helping our inventory problem. And so these stats aren't really too telling when it comes to what's the exact impact, because an investor that is taking a distressed property and improving it, bringing it back to a place that's livable, is good for the market. CAR says Knoxville recorded the fastest rent growth by any U.S. metro area in 2022, according to the National Association of Realtors. So essentially Knoxville's rental market is booming. Business is booming. It says that overall, same store effective rents in the Knoxville metro area were up 14.1% year over year in the fourth quarter of 2022, outpacing the 6.6% growth nationally per RealPage. Knoxville rents grew nearly twice as fast as those in Nashville, recording a 7.8% rent growth during the same period. On average, effective rents are 48% or $447 higher than pre-pandemic levels. Rent growth over the past year has been its highest among Class A units and lowest among Class C. So like the fancy apartments, higher prices. In the fourth quarter of 2022, the average monthly rent in Knoxville stood at $1,300, below the national average of $1,600 in Nashville and the $1,800 national average. Despite the appreciable slowdown in apartment demand in the second half of 2022 due to uncertain economic conditions and lower level of new household formation, rents continued to grow in the Knoxville area in the early months of 2023, registering the second fastest annual rent growth among the top U.S. metros in the first quarter of 2023. All right, demographic trends. Check out this graph. This is showing what's happening with population, aging, etc. Silent age, these are people born in 1929 to 1946. Obviously, that population is continuing to decrease. This report is saying that millennials and baby boomers are our largest two population groups. And then also demographically, essentially what they're saying is that millennials, who represent the largest living generation nationally, are entering their prime home buying years, while a growing share of baby boomers are nearing retirement age and may be soon looking to downsize or find more age-friendly housing. So a couple things. What they're saying there is millennials are buying houses now. That's one of our huge population groups. Baby boomers are also seeing a shift in what's happening in their lives, retiring, downsizing, and may require different housing, which the implication or what's implied here is that we're going to have further demand problems. All right, let's talk about some housing challenges according to the State of the Market 2023. One of those mentioned is aging population. So essentially, overall, America's senior population is in the midst of unprecedented growth. This is especially true in the Knoxville metro area, where 1 out of every 5 residents is age 65 or older. 70% of the region's housing stock is comprised of detached single-family homes, which oftentimes is cost prohibitive for seniors living on a fixed income. Moreover, only around 10% of homes nationally are considered aging ready. So we've got this aging population. 20%, 1 in 5 of residents in the Knoxville area are 65 and older. However, the stock and inventory of homes are not really considered age appropriate, if you will, for this aging population. So that continues again we keep hearing this inventory problem over and over again. Something else that's a challenge in the area is when it comes to housing disparity. So according to U.S. Census data, the homeownership rate among white households. According to U.S. Census data, the home ownership rate among white households in the Knoxville metro area stands at approximately 72%, while Black, Hispanic, and Latino households have significantly lower rates at 41% and 39% respectively, a gap of more than 30 percentage points. So what we're seeing is that we don't have equitable home ownership rates. So if you dig into this a little bit further, if we look at, mortgage applications, if we look at mortgage application denials, there's no equity when it comes to race groups. So differences in home ownership rates are driven in part by income inequality and disparities in the mortgage market. According to the Home Mortgage Data Disclosure Act data from 2018 to 2021, mortgage applications from Black and Hispanic Latino applicants in Knox County were denied at nearly twice the rate of white and Asian applicants, reflecting the substantial differences in access to mortgage credit across demographic groups. Another housing challenge is specifically related to higher construction costs, which I know we've all heard, like housing construction, housing materials off the chain. The prices are crazy. So according to the U.S. Bureau of Labor Statistics, construction building materials prices increased by 14.6% in 2021 and 15% in 2022. Overall, building material prices for single-family residential construction are up approximately 34.1% from pre-pandemic levels as of the fourth quarter of 2022. By comparison, the price index of service inputs to residential construction, including legal, architectural, and engineering services, rose by 18.9% in 2021 and 7.7% in 2022. So prices were up in materials, but also legal, architectures, engineers, those prices rose as well. While still 26.2% above pre-pandemic levels, the cost of residential construction services has trended downward since reaching a peak in the quarter of 2022. So this is what I think is insane. Like when I look at my notes, exclamation, question mark, explanation, question mark. I did it over here too. Listen to this and we're going to dissect this. Moving forward, material costs and labor availability concerns are expected to improve as supply chain disruptions end. However, because home building is largely a debt-financed industry, increased borrowing costs due to higher interest rates are expected to offset lower material prices. As a result, construction costs are likely to stay elevated in 2023. Essentially, materials aren't costing as much, but because rates are higher, it's still going to cost more to build. In addition to the rise in labor and material costs, land prices have risen substantially. This is what I was talking about. This is literally bonkers, okay? Across the Knoxville metro area, the price of a quarter-acre lot rose from $29,900 in 2012 to $104,000 in 2021, an increase of $74,200 or 248%. So since 2012 to 2021, we saw a 248% price increase in land. On average, the share of a home's overall value that is attributable to the land it sits on was 44.1% in 2021, up from 23.7% in 2012. So here is the major word to think about when we're thinking about what's going to happen for the rest of 2023, going into 2024. And the main word I want to tell you is uncertainty. Like it's uncertain. I mean, really. What Carr writes is, after 2 years of record-setting growth, East Tennessee's housing market is poised to contract in 2023 as elevated borrowing costs, higher home prices, and uncertain economic conditions have slowed buyer and seller activity across the United States. While buyer demand is expected to moderate over the next year, upward pressure on home prices isn't expected to subside. All right, so rental market outcome. What Carr says is, with demand hovering near an all-time high throughout 2022, Knoxville's rental market is more expensive and more competitive than ever. A wealth of new supply is slated to become available in the next 12 months, which, combined with uncertain economic conditions, will place downward pressure on demand and rent growth in 2023. However, Despite facing multiple headwinds, Knoxville's rental market is poised to experience modest growth. Also, when it comes to rent and occupancy, car rights, even with supply expected to expand, inventory is poised to remain tight as renewal rates continue to hover near an all-time high. So people are renewing their rents and staying in their apartments despite increased rent payment. Occupancy is forecasted to decline to an average of 96.5% across 2023 from an all-time high of 98% in 2021. So the idea is the rental market is going to stay strong. People are continuing to renew their leases. For the most part, we're not seeing people buying. We're just seeing more people continuing to rent. So a couple things I think that are an overall, like if I'm gonna just sum this up, inventory remains low. I had someone tell me that, like, that's not true, Haley, about inventory. I'm seeing new houses being built. Yes, you are seeing new houses being built, and you're also seeing a lot of apartments being built. But when it comes to new homes, a lot of those are spoken for immediately because we have so many people, especially if it's a lower price point house, wanting to afford and purchase a home. So we have not gotten to a place where we are building enough homes, and then we were already low in inventory. We've not caught back up with pre-pandemic levels of housing inventory, and even pre-pandemic, like 2022 or 2020, at that time before the pandemic hit, we were considered to be super low in inventory. So that, of course, has impacted affordability. We've seen with mortgage rates this idea of a lock-in effect. We learned during this report that 68% of people in Tennessee have a mortgage with an interest rate of less than 4%, which is not a very high incentive to go find another house if you're going to have a way higher mortgage payment. And then the idea of like this stat that just is just like ringing in my head of this idea that mortgage payments are up 71%. So anyways, those are some of my thoughts about this State of the Housing Market 2023 from the Knox Area Association of Realtors. I will link this for you. So feel free to go check it out in your spare time. This is dated May 2023. I am making this on June 7th, 2023. I hope that wasn't boring. I hope it was informational for you, but I just want to encourage you, to go check out the stats yourself, see what your take on some of this stuff is, and let me know your thoughts. In the meantime, I will see you on the next video.